European diesel prices hit their highest in 4 years, with futures rising this week by almost 10% to more than $200 a barrel. It's a flashing red light that the US-Israeli war with Iran is a threat to economic growth for many countries this year. For more about the economic outlook for Europe, we are joined by DW's Cassandra in Berlin. Cassandra, what's happening with diesel?
Well, thanks for having me. This is all connected to the stoppage of oil through the Strait of Hormuz, which has cut off millions of barrels of supplies of refined oil products from the global market. For reference, global diesel prices have climbed faster than the price of crude. And the cutoff of Middle Eastern supplies has forced European buyers to turn elsewhere, triggering a bidding war. Keep in mind that Europe generally produces less diesel than it consumes and does rely on imports. Analysts are warning that Europe faces supply shortages in the coming weeks if the strait is not reopened. I should note that ports and refiners in Russia, which is another big diesel exporter, have been pounded by Ukrainian drones since the U.S. relaxed sanctions on Moscow. This is, of course, another threat to the global source of diesel.
Indeed. And Cassandra, in Germany, there are dire warnings about growth this year. What's expected for 2026?
Germany's economy has been on life support for the last few years. Speaking from my perspective, every time we get some analysis about real growth from the government or outside institutions, it seems like they're pushing back real proper growth to the next year. Since the pandemic, it's all been, to quote the musical Annie, a day away. So that's the backdrop to this recent announcement from the country's top economic institute. They're now halving their growth forecast for 2026. When they last appeared from their ivory tower in the autumn, the IFO Institute was saying that they expected growth in 2026 to be approximately 1.3%. Now it's expected to be an anemic 0.6% growth increase in Germany, with just under a point of growth expected in 2027. And I don't want to throw too many numbers at you, but just to put this into perspective, this was after 0.2% growth in 2025 and negative growth in 2024 and 2023. So it's gloomy here, to say the least.
Definitely, Cassandra. Very quickly, what other factors are weighing on the German economy this year?
Well, this economic institute that I was mentioning earlier is pointing to the U.S.-Israeli war with Iran and subsequent energy shock as a major contributor here. We are already seeing inflation as a concern, with the German central bank, known as the Bundesbank, warning about 3% inflation in the near term, driven by higher fuel and heating oil prices. The chemical sector may also be vulnerable to bottlenecks and price increases, with the German economic minister even acknowledging the sector's vulnerability. Chemicals and pharmaceuticals are the third largest industry in Germany, after all. All of this comes as the German government debt is increasing. There has been new borrowing for defense, infrastructure, and climate protection, and German gross debt is expected to rise to about 67% of GDP by next year, which is still below the EU average, I should say. But this could all mean a call for consolidation of that debt by the end of the decade.
All right, Cassandra, thank you so much for your analysis.